Welcome to Finscale, a podcast created by Solène Niederkorn, shedding light on innovation in finance, banking, and insurance.
From SME financing to lending as a service. Patrick Stäuble, CEO and founder of Teylor.
We were sharing an office with three other startups, and it was this old and kind of a not too nice area of town, this apartment that we could barely afford. And there were three startups working from this apartment with no space whatsoever. So me and Andre, what we would do is we would lock ourselves into the bathroom one at a time and sit in the bathtub and do cold calls. And that's where we got, the first couple of customers, and it just grew from there.
Lending is one of the major pain points in finance, both from the perspective of lenders and borrowers. I have been following Teylor for a while, and it was high time for me to have a discussion with its CEO, Patrick. Starting as a solution to lending SMEs in Germany, Teylor cleverly diversified by developing a lending as a service solution and a feature-rich SaaS platform for banks. Teylor aims to support SMEs while helping financial institutions streamline their lending operations. We also talked with Patrick about the financing aspect and the reason that led this Switzerland-based startup to structure itself around a securitization vehicle in Luxembourg, enabling various types of lenders to participate in the financing process: junior, senior, and mezzanine tranche. This approach has allowed them to handle substantial volumes and rapidly expand their business. It's an episode I thoroughly enjoy, combining technicality and European structuring. Enjoy the show! Hello everyone. Hi Patrick.
Hi, great to see you again.
Yeah, really happy that you accepted my invitation to talk about Teylor on Finscale. And a big thank you to Manon, because she introduced you to me quite a while ago. So I just wanted to say hi to her. Can you please introduce yourself before we start?
Sure, absolutely. Also from my side, big thanks to Manon and to you. Great to be here today. So I'm Patrick. I'm the founder and the CEO of Teylor, Swiss originally, but spent a lot of my life living and working outside of Switzerland. Studied originally economics at the University of Zurich, and then spent some time doing peacekeeping missions for the Swiss military. And in the last 10 or so years, I've always been working in the banking, fintech, credit, startup space, and focused since a few years now fully on Teylor.
Great. I decided to concentrate on two things. First, of course, understand what you do at Teylor, but then investigate why you chose to create a securitization vehicles, but also the relationship you have with the financial institutions, because you offered lending as a service for financial institutions. So I was interested to understand a bit more in details your B2B offering. But then maybe you could start by explaining to us how and why you decided to create Teylor.
Sure, absolutely. So before starting Teylor, I'd been working for a couple of years in the kind of B2C retail lending space at another fintech. And in that time, that was kind of 2013, 2014, up to about 2017, when there were so many really exciting kind of B2C retail lending startups coming to the market. And I had this feeling in my stomach that I was missing, or that I had missed this giant wave of fintech digitization and fintech startups. But the more that I was kind of active in that space, I realized, okay, there's a lot happening for private customers. But if you look at the kind of small business segment, it's still, maybe 5 or 10 years behind where we are, where many other countries are, but certainly behind also in Europe, where we are in the retail B2C space. So I started looking more and more into this industry and kind of realized that in the majority of European countries, if you are a small business and you walk into the bank branch and you ask for a loan of, let's say 300,000 euros, on the one hand, it's going to be an extremely painful, paper-based, slow process taking many weeks and many months. Mm-hmm. But on the other side, also that, the majority of banks also haven't figured out this problem. So a funny kind of statistics that I found at the time, or that is still valid now, is that the average bank in Germany has a negative 3% return on equity for small business loans. So I saw it was a huge industry. The borrowers were, really not being served very well. The lenders were not doing a great job of it. And that's kind of where the idea for Teylor came from. And fundamentally on day one, myself and my CTO, Josh, we basically just asked ourselves the question, if we kind of took this credit life cycle of an SME loan and looked at the way that the banks do it, threw this completely out the window and tried to rebuild it from scratch, what would that look like? And we built that, and that's kind of where we started on this journey.
Great. And how did you recruit your first clients?
So we actually went to market originally just as an alternative lender, which is our biggest kind of market, still today our biggest revenue source, where we give loans to small businesses, not on our own balance sheet, but with private debt investors, with banks that we work with. There, the first couple of borrowers that we found were kind of from two channels. So channel number one, I started writing different kind of credit brokers and stuff on LinkedIn, and they would refer us customers. And the other channel was that me and Andre, who was today our chief commercial officer, we literally went to Google, started looking for companies, and started cold calling them. So in our old office, we were sharing an office with three other startups, and it was this old and kind of a not too nice area of town. This apartment that we could barely afford, and there were three startups working from this apartment with no space whatsoever. So me and Andre, what we would do is we would lock ourselves into the bathroom one at a time and sit in the bathtub and do cold calls. And that's where we got, the first couple of customers, and it just grew from there.
Great. So you established a company in Switzerland, correct? But you serve mainly German clients. I mean, this is how you started.
Yeah, exactly. So even today, more than 2/3 of our revenues come from the German market. I am Swiss and we are a Swiss company, but we always felt that the problem that we're solving is a European problem or a global problem. So we decided, okay, rather than going to the Swiss market, which is maybe relatively small and fractured in terms of languages and providers, let's go to the biggest market. And if we can crack the biggest market in Europe, then we'll be able to wrap up on some of the other ones afterwards. So from day one, we were always really focused on the German market, which I think helped massively just because we have a much bigger total addressable market, which of course makes it much more interesting for investors. There's more partnership opportunities. You have more opportunities to learn. So we're very happy with this decision in retrospect. We are live also in Switzerland with some customers now who use our tech platform, but the main focus still remains Germany for the time being.
There is no cross-border issue when you implement your company in Switzerland and then you sell your products in Germany?
No. So, I mean, from the side of the business where we license our technology to financial institutions, it's no problem at all because we're just selling a tech platform.
Yeah.
For the lending side of the business, we work together with a Luxembourg-based AIFM and a German fronting bank that support us and give us a regulatory framework to be able to do what we do. And obviously, they support us by doing a lot of the regulated components of what we do. We do together with them, or they do on our behalf. So we do spend a lot of money on legal fees, but nonetheless, I do very much love being in Switzerland. So it's definitely worth all of those legal fees.
I can understand. I love Switzerland. Okay, so you said that you were working with private debt funds. I also mentioned securitization because when we discussed, I guess 2 years ago, you were just starting implementing your securitization vehicle in Luxembourg. So what is the purpose of Teylor securing? I guess it's a 275 million euro private securitization from different big institutions such as Barclays, ENG. Yes, what the purpose?
Yeah. So basically, the reason we decided to take this step was that we, like probably many other kind of lending fintechs, we started off initially just partnering with banks, and banks would provide us the refinancing for our loans. So we would originate a loan and it would get, in the end, live on the balance sheet of a bank. And we went kind of a bit bigger. And then about 2-3 years ago, I think probably when we started speaking, that was around the time where we launched our first fund and our first SPVs in Luxembourg. So as we got bigger, we realized we could get much more attractive margins by working directly together with private debt investors. But the problem that you have in that kind of early stage is that you don't have a track record really, or you have a very low track record. So you have to find quite entrepreneurial investors at first. So we found a lot of family offices, asset managers, high net worth individuals who would invest into our SPVs and our funds. And then after a couple of years, when we built up this track record, we knew that the more we can get our cost of financing down and the more that we can kind of get large volume of financing in one go, the easier it is for us to scale the company. So what we did at the end of last year was we started going out and speaking to institutional investors and basically saying, look, we started with banks, we've been working with our fund and with our investors over the last couple of years, and now we want to take the next big step and do a larger transaction. So we went out with some investors that we already knew, plus then we did a relatively competitive process and found Barclays and M&G to come into the vehicle. And overall, the vehicle size is 275 million euros. As you said, the goal with this money is really to finance small businesses in Germany. Right now, there's, and we're very lucky that our investors and the banks and the lenders that we work with have seen this, but there's huge demand for digital SME financing in Germany. And we seem to have really kind of found a sweet spot in terms of customers and customer size and origination. So we're working with them, and these 275 million are basically going to be used over the next 18 to 24 months to finance, great, fantastic small businesses in Germany in the most comfortable possible way.
Okay, great. And why did you choose a securitization vehicle rather than, I don't know, an SPV? It's for scaling purposes?
Yeah, so the good part about the securitization vehicle was that we could work with our existing investors who were, happy to take maybe a junior tranche and take more risk, and then have the way that we have it segmented is that we have a junior tranche, a mezzanine tranche, and a senior tranche. And we had a lot of interest from these different types of debt investors, so it was very good to get a large vehicle very quickly. Mm-hmm. So it was mainly about size and cost of refinancing was our big focus. It was also the type of vehicle that was kind of known in the market by different investors. Who had, for example, done similar transactions in the UK, but maybe wanted exposure to the German market like we offered. So there were several factors that played into making it for us the best decision.
Okay, perfect. So I read an article recently about Teylor, and I read that you were exploring CLOs. Is it something that maybe you could explain to us why you think about this?
Yeah. So basically, the current structure that we have is an ABS structure, an asset-backed security structure. So basically, the assets are the loans that we generate, and they are held in an SPV. And the different kind of levels of lenders and investors, they get returns based on where they are in the capital structure. So as the borrowers pay back their loans and they're paying back interest, one small part of the interest goes to the senior, a mid-sized part of the interest goes to the mezzanine, and the largest part of the interest goes to the junior investors. But conversely, also, of course, the junior investors have the most risk, the mezzanine the second most risk, and the senior lenders have the least risk. The kind of doing a CLO or kind of doing a public markets take out of this is something that we are certainly interested in doing in the future. So once we've built up, maybe once we have the full 275 million in loans, we have different options. Either we can, turn it into a publicly traded vehicle, or we do an M&A transaction where we sell the entire portfolio to a third party. We're in discussions about this, but it's not our priority right now, because we just, for now, focus is let's give these 275 million out to borrowers as quickly and as with the best possible borrowers that we can, and then we'll see either we wind the vehicle down or sell it on to other investors, depending on how the market is in a year or so.
Great. Thank you for this clarification. Okay, so I said in the intro that I was also interested to understand the challenges faced by financial institutions when it comes to loans for the small, medium enterprise in Europe. So how did you figure this pain point, and why did you decide to launch a SaaS solution for FIs?
Yeah. So it was actually a really funny situation, because originally we started and we just wanted to become an alternative lender, so lending to small businesses. And then about a year or two after we launched, so I would say roughly in 2020, we were always speaking with a lot of banks, and a lot of banks kept approaching us and saying, we're not really interested in funding your loans or anything like this, but can you please explain to us how it's possible that you're able to do this 90% cheaper than we are and 10 times faster and stuff? So we had a lot of these discussions where banks and consultants and all kinds of companies were approaching us and asking questions about our product. And we realized that there was actually quite an interesting market, not just in giving the loans yourself, but in enabling other people to give the loans. It obviously led to a big discussion for us internally, because we thought, on the one hand, we have a great and growing lending business, but do we really want to start kind of giving our competitors the weapons or the tools to compete against us more aggressively? Ultimately, what kind of the view that we had was that this market needs to become digital and it's going to become digital. And if we don't help it become digital, then someone else will. And at least if it's us kind of arming giving our competitors the tools, it means that ultimately our market share is much larger because there's going to be, a group of customers that we can lend to directly, but there's also going to be other customers that will maybe never leave their banks and that will otherwise never be able to monetize. Mm-hmm. So we started, we saw that as actually a positive opportunity. So we started selling this technology to them. And with time, we also realized that it's also a great strategy for internationalization. So we started going out to other countries, and rather than kind of trying to find investors and sales teams and whatever in each different market, we just basically license our platform to local players, which is much faster and much more easy to scale than scaling a lending business. So it really came out of, on the one hand, demand from the banks. It's not part of the business model that I had thought of on day one, to be honest. And then it grew really because we saw that it was just a huge strategic opportunity and people really liked our technology, and we built something what I think is quite unique.
And because the credit life cycle is quite wide, there are many different elements that we need to consider. So the idea is for you to digitize the entire credit life cycle or part of it. And maybe there is a different go-to-market strategy if you decide to cut the cycle in different parts. So how did you decide to figure this out?
Yeah, so basically what we did is, because we built, and we've always built everything in-house. So pretty much everything except maybe some kind of external data sources or KYC provider, we've really built the entire credit lifecycle ourselves. So we had everything there. And then what we decided to do from a product strategy perspective was that we said, let's make a platform that's as broad as possible. So it covers as much of these, 20, 30 process steps that you might have throughout the credit lifecycle, but that each of these modules, as we call them, or each of these process steps, is an individual module that can be used by the bank. But on top of that, not only is it an individual module, but we tried to make each module as configurable and flexible as possible. So the alternative strategy approach would have been that we say, let's pick one or two of these process steps, maybe underwriting or customer onboarding, and go as detailed and as deep as possible in that area. And we decided to go for breadth, but make up for the kind of lack of depth by making it extremely configurable, so that we have some customers that use our platform for onboarding of agricultural lending customers in Germany, and then other customers use the same tech platforms, other financial institutions use the same tech platform and the same modules for merchant financing in Germany. And I think the fact that we have a one-stop shop solution makes it extremely easy to kind of keep data throughout the credit lifecycle, rather than if you have to connect 8 different tools. And I think the real strength is the configurability of the platform, that you can come in and say, look, I want to use it for this with these credit criteria, this type of customers. And each bank can basically use our tools to make their own processes rather than having us define what the process should look like, which is a big strength, I think.
Yeah, I can imagine. And are there some geographical constraints? I mean, local regulators have also their own rules. You were talking about onboarding. So if we just concentrate on AML considerations, you have to consider your own rules, of your local regulator. So how do you tackle...
There's always enough regulation.
So how do you tackle these local considerations? And I'm also thinking of I'm always taking this example because it's very particular, but in Switzerland, in Germany, you have to perform the onboarding of, for instance, directors, I can imagine, of companies with face-to-face video conference. So how do you consider all those local specificities?
Yeah. So basically, I mean, the greatest example for this is the fact that we have customers in Germany doing everything in German under German law, and then we have financial institutions in Switzerland, in the French-speaking part of Switzerland, giving loans using the same platform, all under Swiss law and in the French language. The way that we approach this is basically that because the platform is customizable, we let the banks or the financial institutions themselves define how the processes should work. And on top of that, we connect to pretty much every data source that we can find, and then we allow the individual kind of bank users of the financial institutions that use our platform to themselves define which data should be pulled from which provider at which step in the process. So that if you as a Swiss fintech or a Swiss bank know, okay, I need to ask these things here, and the next step I need to check these things, and then I want to do this, that you can just define that, and you can kind of basically click and say, these are the data that should be pulled here, these are the data that should be pulled there. In some cases, I would say that the biggest complexity for us is that we, kind of have to be constantly onboarding new data sources as we as we go to new countries. But the process itself is, it could even be the case that you have a bank in Geneva versus a bank in Zurich that might have different requirements for how they want to onboard their customers. We don't really care. You can do whichever process you want with our solution. We'll just provide you the framework and the tools to do so.
And you are regulated or not?
No, we're not regulated. We have in Germany what's called a 34C credit brokerage license, and that's our only kind of regulation for us as a company.
And there is no need, sorry, I go a bit too deep in the regulatory considerations, but it's also interesting to see, because in some specific cases, in the case of a real lending as a service solution, where the financial institution is really delegating the lending to you, how is it working? Because it's a sort of outsourcing.
Yeah. The way that it works is that the credit decisions are still taken by us together with not by us, by the fronting bank together with us. So ultimately, in the lending as a service case, as is the reality with many lending as a service offerings, the credit decision is not still on the level of the bank. So basically, there's two ways. So basically, if the bank is giving us the customer and we loan to the customer, then the credit decision is with us, respectively with our fronting bank and our fund manager, who are regulated entities. If the bank is just using our technology for their own lending book and their own credit decisions, then it is still their own underwriting criteria, their own staff making the decisions, and they just take their decisions and their rules and they put it into our software. So they, they're not outsourcing the decision making, so to speak, which is really the critical part. We are basically like, if you take it really to the extreme, it's like if you have a financial institution that uses Excel to make the decision is still made by the staff member and the rules of the thing, even if it's being calculated in Excel. We're like a very, very much better version of Excel in this example.
Okay, great, very clear. Can you please navigate the different features and functionalities that the SaaS offers currently?
Yeah. So it's not so simple, because in total it's about 26 different modules that we offer in the meantime. The kind of most commonly used ones is there's basically two modules that are really the backbone of everything that we do. Number one is the product configurator, what we call it, which is basically where you as a financial institution can come in and you can define and say, this is the product I want to sell. This is how the things that should be checked. These are the process steps. These are the permissions of which employee is allowed to do what. And then the second key module is what's called the workflow manager. So the workflow manager will take the information from the product configurator and then guide the customer or the staff member through the process, which can on the one hand mean pulling external data sources through our API gateway, or it can mean asking the customer a certain question, rejecting the customer, etc., and basically, or allowing the employee to do something, encouraging the employee to do something, and all those kind of things. Those are really, I would say, kind of practically speaking, the most relevant modules. We have a few other really good ones. So obviously one big one that is very popular is what we call our Finscale module, which is basically an optical character recognition software that's kind of self-learning. So basically what the customer can do is upload bank statements, financial statement, quarterly statements, whatever, and the system will read out all of the data and attach it to the application and spread it into the underwriting software. And this is a system where the employees can then, if there's an error, can correct it, and the system will then learn and get smarter. So the more customers we have, the more data that we have, the smarter that the system gets. We also have, for example, a portfolio management tool where you can kind of define rules for portfolio monitoring. So it can be, for these type of customers in this industry, check that the address is still valid every 3 months, do a PEP check once a year. And then this can be, of course, connected then flexibly to our task management system that will then say, okay, the customer moved, but he didn't inform us. Let's make an application task to one of the sales staff to go out and find out the new address. So really, there's a lot of different modules. I would say those are some of the most common ones, but we also have an onboarding module. We have an API gateway. We have a portfolio analytics module. We have a role-based access management and identity access management, et cetera, et cetera. There's a lot in there.
Great. And what is the fastest growing part? Is it for rather SME financing or the lending as a service and SaaS solution for banks?
Right now, it's definitely the lending part of the business. Now that we've gotten the great refinancing partnership with Barclays and ENG, just because we can offer very good conditions very quickly, and the market is very, very hungry for this product. And at the same time, selling the kind of lending as a service and SaaS platform, the sales cycles are much longer. So if you go to a bank and you want to convince them to use your technology, it's going to take 12 to 18 months. So the ramp up takes a little bit more time.
Okay, great. Just a few minutes left, and then we'll have to close the discussion. Can you mention a few of your clients and investors?
Clients and investors. So I mean, from the investor side, we have a variety of different kind of venture capitalists, family offices, and things like that. Our largest kind of publicly known investors is Wenvest Capital, which is a VC from Munich, and IVC, which is a venture capital from Luxembourg. They're great. Both of them are fantastic investors. IVC came in our last round, and Wenvest came about 2 rounds ago, and have Christoph Ometa sits on our board. In addition to that, we have a number of different kind of smaller family offices, some business angels. Patrick Svinton, the CEO of Union Capital Bank, who also sits on our board. We have the Steinbeiß Group in Germany, Ziyex, VC from Switzerland, plus various other ones. Customers that we have a few that we work with closely. So we work with, for example, AKF Bank, who is the bank of the Vollwerk Group. We work with Credo in Switzerland, and have a few other customers kind of all over the place, really. At the moment, we have customers in Luxembourg, Germany, Switzerland, Austria, and are in the process of going live in France as well with the first platform customers there.
Sky is the limit.
Yeah, absolutely. And we want to get there as quickly as possible.
So what are your next steps?
We basically have three things that we're really focused on at the moment. So on the one hand, we want to keep building out our platform. So we're launching this quarter kind of an AI underwriting assistant, where we basically take all of the data that we've gathered over the last years of using this platform and try and kind of not replace the role of the credit analyst, but kind of make a digital credit analyst that kind of writes the report, tells what things to focus on and things like that. So on the one vector is certainly product and engineering improvements. Second vector is we do want to become the biggest kind of funding platform in Germany, which means new products, new segments, new partnerships. And really, we did about 170 million euro of lending last year in Germany. We want to do about 300-ish million this year, which are well on the track to achieving. And then finally, internationalization. So we're speaking with potential banks, financial institutions, potential customers all across Europe who are interested in what we've done in Germany and want to be able to license our platform to do the same thing in their home markets. So those are the three kind of verticals, or the three vectors. And we're also in the process of closing a new equity fundraising round, which is coming along quite well. We broke even recently, so we're profitable. And so from now on, it's really hardcore into this growth phase.
I'm really impressed, though. No, compared to our first discussion like two years ago, I'm really impressed by the evolution.
Yeah, there's been a lot of sleepless nights in the last 2 years to get here, though.
I can imagine. Okay, Patrick, just to conclude, I would like you to recommend us a book or something that inspires your podcast, or a film that you would like to present for us.
My favorite books, what I like to read in my spare time, is either biographies or science fiction books. Biographies I always find very inspiring, but science fiction books are the ones that help me kind of relax and switch off my brain. So I'm rereading at the moment the Foundation trilogy by Isaac Asimov, and that's a great series of books that I would recommend to anyone. Movies, I haven't watched that many. I just finished a couple of weeks ago, the new series of Succession, which is fantastic, and I recommend to everyone.
Great. Thank you very much, Patrick. See you.
Thank you as well.
Bye.
Bye.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.